Welcome to the third lesson of the free academy. So in this lesson, I'm just going to teach you all about the tools and the setup that you are going to use because it isn't really hard to understand and we're not covering anything more or less than that. So let's just dive into it. The thing that you need is to understand that you're going to use software on one side and on the other hand, you're going to use hardware. So like you're going to use this combined, of course. So let's just dive into it. For the hardware, the thing you need is like a laptop, a decent laptop that works, or a computer that works. You don't need anything fancy, so that's basically all you need to get started with trading on the hardware side. You do need a stable internet connection. If you can have a wired internet connection, it's even better. But don't think about buying 2 or 3 monitors or screens because, like what I always say, the more screens you put in, the more confusing it would be. And the longer your process of learning would take. So just focus on one screen to start with, focus on understanding how to trade, what to do, what not to do, and don't buy new screens, don't buy a whole trading desk or anything like that. Just get started with your laptop or with your computer that you have right now, and we'll just see if anything works from there. So the last point that you can see is a simple setup means you have less distraction, which means that you could have better focus. The next thing is TradingView. This is a part of the software that you need to use. It's used by millions and millions of traders worldwide. It's one of the most advanced things that you can make your market analysis on. So this is used to see the charts for stocks, for crypto, forex, commodities, like anything you can trade, you can find on TradingView. And the free plan covers about 95% of what you need. Like the only downside is that you would have advertisements, etc. And you cannot place multiple or enough alerts if you are trading on multiple assets. But to get started, the free plan is just fine. The other thing is that on TradingView, you can like easily draw support resistance levels. You can easily find all the points that you are actually looking for in a good trading strategy. And you do also have multiple indicators that you can add, and like to get started to understand where the market is moving, etc. Indicators could be fine, but I prefer not to use them. Just understand how the price moves and why the price starts and stops at certain points. But yeah, like that's TradingView. It's available on the browser. It's available on the desktop app. You can like download it on your mobile phone. You can connect everything as well. And yeah, if you're logged into the same account, you can easily monitor your trade. If you are in a position, you can manage that position from your phone. And I think that's very nice. So the most important thing is something that we don't yet have covered now, but professional traders, they keep track of each and every metric they achieve in trading, each and every trade, and their edge actually lives in their data. And that's where a proper journal comes into play. What you need to do, and I don't mind if you journal by hand, if you use journal trades or anything, but what you need to do is journal all your trades, because this way you can see patterns in your trading, the mistakes you make over and over again. You can understand like, hey, these are mistakes that I'm making. And on the other hand, you can also see like, hey, these setups are working fine for me. Or anytime I take this trade with these conditions, I can see, hey, this trade is moving in my direction and it's going as I expected it to go. So those are important things that you need to keep track of. And the most important thing, in my opinion, in trading is your R multiple. Whenever you are tracking your R multiple and your win rate, it's like a combined thing. But that's when you can become a structurally profitable trader, because whenever you understand like, hey, my win rate is 60% and I have an R multiple of 1 to 3 or 1 to 4, then you're exceptionally good trader. So you're performing exceptionally well. And that's where you can build your performance really and grow in your trading journey. And what you need to understand is, if you take a look at these examples that I've put in, what Journal Trades does, it logs your complete trade. It says to you if it's a win or if it's a loss, which direction the trade was in, your planned R multiple, your realized R multiple, and the trade score. Well, there's way more, but these are the most important things. Like if you wanted to journal by hand, you could just journal by hand and you would understand correctly like, hey, this is a trade that I've made or lost about 1 R, or I've lost about 1.15 R or made about 4 R. What you can understand then is, hey, this R multiple, if I'm losing, I lose about 1.15. If I'm winning about 4 times what I was risking. So that's essentially what you're looking for. That's where you are actually building your edge. So bottom line of this slide and of this explanation of a journal is that you're not trading on your gut feeling. You're just trading into hard numbers on data and into actual things that you have achieved and that you have journaled and you have seen or proven to be working. So the very last thing, and I think this is the most important overall, because otherwise you wouldn't be able to trade, is you need to have a broker and choose the right exchange. So like if you're trading crypto, the broker and the exchange are basically the same thing. But whenever you're trading stocks, you do have a broker, just as Interactive Brokers or anything like that. And then it's traded on, for example, the New York Stock Exchange, so the NYSE. Just a quick explanation, what is a broker? So essentially a broker is the place where your buy and sell orders get executed. The broker is regulated by financial authorities and it holds your funds securely. So that's what the financial authorities make sure of, that the broker is actually in a major way keeping an eye on your money and not lending it out right here and right there. So you know that your money is safe right there. It's best for stocks, ETFs, and option trading, because for what I said, for crypto trading, you would use just a Bybit or a OKX, Binance or whatever. And this is basically the exchange and a broker in one for crypto. But yeah, that's something you need to understand. And you would understand whenever you are dealing with it. So on the other hand, what is an exchange? This is actually the platform where buyers meet the sellers. So it's mainly used for crypto assets, but what you need to understand is that the exchange for stocks, what I just said, it could be the NASDAQ, it could be the NYSE. Those are basically the places where buyers meet sellers. What you need to do is check the fees of certain exchanges, because exchanges will charge you fees. And there are certain withdrawal limits, primarily in crypto. Like for stock trading, it's not that important, but you need to understand that these are the things you need to keep an eye out for. So what to look out for is the broker or the exchange regulated in your country? There are competitive fees and tight spreads with certain brokers. And what you need to understand is that what I just said, certain brokers have lower fees than other brokers, but you need to make sure that if you are choosing a broker, that you're not just looking at the fees, but most primarily, is it regulated? And I would prefer using a regulated broker, because the tiny fee saving from offshore brokers is not worth the risk. Essentially, if you're trading with $100,000, $200,000, but even if you're trading with only $1,000 to $5,000, you need to understand that you worked hard for that money. And if you're putting it in an account with an unregulated broker, they essentially can do whatever they want with the money. So that's something you need to keep in your mind. You also need to look out for that you have a broker with a fast and reliable execution at all times. So it doesn't matter what time it is or whatever. Whenever the market is open, primarily for stocks, and like for crypto, it's 24/7, it needs to work. Whenever you want to put in an order, it needs to work. Then I think the most important thing with choosing a broker is that you have a actual customer support that you can reach. Doesn't matter if it's by email, if it's by phone or whatever, but like most of the brokers nowadays have an AI agent. And what you need to do is that you want to actually be able to talk to a person if you are having questions or finding issues or complexities with anything. So the only thing that I wanted to address to you guys is be aware of unregulated offshore brokers. Those are not the brokers you want to choose. Yeah, I think this is it for the tools and the setup that you are going to use. If you have any questions, feel free to reach out, and I'll see you in the next lesson.